Hi, good morning. This is Jason Sen for NT Markets with another weekly look at dollar yen today. I'm looking at this again because we looked at it last week and we'd seen that the big drop from 2007, mid-2007 down to 2011 from 124.14 down to 75.35. We looked at this and we'd seen the market had a good rally up. I was looking for some targets and some resistance. 99.74 is a 50% retracement of that whole move, and this is where we suggested that the market would top out. Well, as you can see, we got to 99.95, so we just overshot by about 20 pips, but we have seen the market top out here, and we're a couple of dollars lower now, trading around 97.5 area. I think this pretty much confirms that the top has been seen, and we're more likely now to drift lower towards 94.5 in my view. With that in mind, that the market's very overbought in many time frames, and I think the pullback from there has confirmed what we believe. If you see the market start heading below 94.00, probably not this side of not this month, maybe in April, we'll have maybe in May rather. We'll have to see how it goes, but then we'd be looking around the 91.5 area. But that's something we can have a look at in the weeks to come. The other market we looked at last week was the S&P. This is a monthly chart of the mini S&P, which quite clearly shows the peak in 2000 before that big crash, the peak in 2007 before the second big crash. And of course, we've spent the last 4 years heading higher steadily, quickly in fact, all the way back up to those highs. So 1586, 1587 was the high here we saw in 2007, if you remember. We've got a trend line here joining the two peaks, and that trend line came in at 1595 this month. That was our ultimate resistance. We got to 1593 last week, and we've backed off pretty quickly from there. So this is all going according to plan, really. That looks to me like a significant top, and I'm very concerned that we're going to head a lot lower, by which I mean over the next few months up until the summer we could easily get towards 1375 area. That alone would be just a healthy correction in the bull market. You know, there's nothing, we're not breaking any uptrends here, we're doing nothing serious. That's simply a healthy correction, but that is nearly 200 points lower from where we're trading today, so still a very significant move. We should get a good bounce from 1374, but that's quite a long way into the future, so we'll just have to follow that one and see where it takes us in the months to come. As far as I'm concerned, only a close above 1600 now would persuade me that we are not going to see a good shank out in this market. Okay, thanks very much for following me. We'll have a look at these again next week. This is Jason Sen for ntmarkets.com.